I'll teach you to make big money by trading Forex, spending only 1 hour a day without risking your cash. Starting from scratch, you don't need prior knowledge. This is ideal if you're aiming to learn a valuable skill, kickstart a low-cost business, earn $1,000 to $1,500 weekly as a newbie, and improve your trading mindset. I'll simplify trading for you, cutting through online complexity. My goal is to help you gain financial freedom and live as you wish, without being glued to a screen all day. You just need a phone or PC. Let's dive in. Before we dive into the content, subscribe to our channel and hit the bell icon for notifications. Your support means a lot, and it helps us create more valuable content for you. I'm gonna start from the basics. What is Forex? Forex, short for foreign exchange, is a market for trading currencies, unlike the stock market where shares of companies are traded. In Forex, you're speculatively betting on the rise or fall of currency prices without owning any physical currency. It offers several benefits over stock trading, including lower fees, 24/5 trading hours, and higher liquidity, with $6.3 trillion moving daily. Currency pairs like EUR/USD represent the trade between two currencies, betting on one strengthening against the other. Trading can happen anytime from Sunday 5 p.m. EST to Friday 5 p.m. EST, with the best times being the New York and London sessions. The EUR/USD pair is popular due to the high volume and low cost of trading these major currencies. Profit in Forex comes from buying, long or selling, short currency pairs based on trends, with opportunities in both rising and falling markets. Understanding the bid-ask spread is crucial to avoid high fees from brokers. Fundamental analysis involves using news and economic indicators to inform trades, but the speaker prefers technical analysis, focusing on market charts and patterns without considering fundamentals. Forex charts use Japanese candlesticks to represent price action, offering visual insights into market trends. What is a pipe? A pipe in Forex is a simple concept used to measure the change in value between two currencies, serving as a unit of measurement for calculating profit or loss, particularly for setting stop losses and take profits. A lot size in Forex determines the amount risked per trade, affecting potential profit or loss. The use of proper lot size is crucial to manage risk effectively. Leverage in Forex trading allows traders to control larger positions with a smaller amount of actual capital, increasing potential returns, but also risks. It's borrowing money to increase buying power, with different brokers offering varying leverage ratios. Proper use of leverage is key to managing risk and avoiding significant losses. What is margin? Trading on margin in Forex involves using borrowed funds to increase your investment potential, which also increases risk. Margin calls occur when losses exceed the account's specified limit. Market orders execute trades immediately at current prices, while limit orders set specific entry points below or above the market price for buying or selling, allowing traders to enter the market without constant monitoring. This strategy includes buy and sell limits for targeted prices, and buy and sell stops to protect against or capitalize on market movements. What is a Forex broker? Brokers play a crucial role in Forex trading by executing trades on behalf of traders, facilitating the buying and selling of currencies without the need for direct interaction with banks. They earn their income from the spread between the buy and sell prices. Brokers simplify the trading process, making it more accessible and cost-effective for individuals. Additionally, successful trading requires the use of specific platforms. TradingView for market analysis and charting, and MetaTrader 4 or 5, MT4/MT5 for executing trades. These tools are essential for analyzing market trends, making informed decisions, and executing trades efficiently. Access to these platforms and a reliable broker are fundamental components for engaging in Forex trading. So, now we have psychology. Psychology is overlooked by 99% of the beginner traders, and so they pass 1 year. The message highlights the critical role of psychology in trading, emphasizing that while technical skills and market knowledge are essential, the ability to manage emotions and psychological responses is often what separates successful traders from others. It suggests that after gaining initial experience, traders realize the importance of psychology in their trading performance. The speaker encourages seeking resources, like their podcast or series, to learn how to develop the right mindset for trading, indicating that mastering one's emotions, such as fear of missing out, FOMO, Greed, or the tendency to overtrade, is crucial for long-term success in trading. This trading strategy emphasizes trend analysis across various timeframes to identify market direction before executing trades. Here's a concise breakdown. 1. Timeframes used: weekly, daily, 4-hour for trend identification, 2-hour, 1-hour, 30-minute, 15-minute for entry points. 2. Trend identification. The trader begins by analyzing higher timeframes, weekly, daily, 4-hour, to determine the overall market trend, looking for patterns of higher highs and lows in a bullish trend and lower highs and lows in a bearish trend. 3. Entry point identification. After establishing the market trend, the trader looks for entry points within identified areas of interest on lower time frames. An area of interest is defined by zones with multiple, at least 3, touches, indicating potential reversal points. 4. Execution. Trades are executed in alignment with the identified trend from higher time frames, ensuring trades are made in the direction of the market movement for increased success rates. 5. Rationale. The strategy underscores the importance of trading with the trend is your friend, to minimize risk and increase the likelihood of profitable trades. 6. Outcome. By applying this method, the trader shares success stories, including significant profits over several weeks, highlighting the effectiveness of trend trading and proper area of interest identification. 7. Learning and resources. The trader encourages further learning about this strategy through additional resources, emphasizing continuous education in trading. This strategy focuses on trend alignment across multiple time frames, patient and strategic entry point identification, and the importance of trading with the market trend for long-term success. Hope you found clarity and understanding in every part of this video. Don't forget to subscribe, like, and hit the bell icon for more. Thank you for watching, and see you in the next one.